Good morning and welcome, dedicated traders. We are the 11th of September. Please just give me a yes if you can hear me and you can see the Forex Factory calendar. And once we've had those responses, we will run through the currency pairs. I have 13 of them that I actively trade, and just let you know this is YouTube live. There is usually a 10 to 15 second delay in answering any questions or queries, or if you do have any trade setups, please let me know and I will go ahead and take a look at those. I don't have a great deal on the radar, so I think what we'll do is we'll run through some currency pairs, go over what we spoke in the last webinar, and maybe look at some of the other currency pairs using TradingView. In fact, I'll just set this up now so we can take a look at it in a little bit. But yeah, how's everybody doing this morning? My son hasn't gone into school today. I was going to walk him and my daughter to school, but the wife did it. I was late this morning trying to get everything sorted, and he's not too well. He's not too well this morning, so he's back at home. He's watching TV right now. Cartoons. 10 years old, still watches cartoons. Saying that, I still watch cartoons. Who doesn't love a good cartoon, eh? Okay, so I've got a few yeses now, so you can hear me and you can see the Forex Factory calendar. So on the Forex Factory calendar, we are Wednesday, the middle of the trading week, and there is no real news out here which I'm going to be paying attention to. There is a little bit of dollar news out at 3:30, crude oil investors. That would not stop me taking any type of trade, and there's no trade in the early hours of Thursday morning. No news that would stop me taking trades in the early hours of the morning either. So pretty much a clear news day. Pretty much a clear news day. So I'm going to remove that out of the way. Stuart says he's good. So I am in a couple of trades. I'm still in the New Zealand dollar, the double top, and I'm still in the euro dollar double top. Both of those have just gone into profit, which is which is nice to see. I feel like all of my trades have not gone into profit at all over the past month or so. Literally, they've just gone the other way and lost. So I'm waiting for the change as usual. Let's move over to the Aussie dollar CAD though. If you remember, guys, we've been looking at this triangle, and we've been waiting to see if this would give us an opportunity to get involved. So what we were waiting for, as you can see from the drawings from the last webinar, we were waiting for a confirmed break above, close above, looking for a pullback and then a continuation, and we haven't got it. So what we actually did is we actually pulled back to previous structure. Now you can see here I spoke about this retest and we broke to the upside, and what we actually did from this point, I'm going to drag this box along like this. Okay guys, what have we actually done here? Have we violated this level of structure or have we held it? What have we done? And I do talk about these higher time frame breakout patterns when they're on the 240 and the 60. Structure tends to be adhered to more, and it's not just on breakout patterns, it's generally speaking, the higher the time frame, the more likely structure is going to be held. And I do talk about how on the higher time frame my stop only goes below this level, because typically the middle of these patterns on the 60 and 240 and daily is where we get the structure holds, and that's exactly what we did. You can see that we broke to the downside here, and if you were aggressive, then quite simply a higher high, higher close candle at this point here would allow you to get involved with this trade and would have allowed you something like this. However, as per my rules, I still need this confirmed break above, close above. So right now this is just waiting. We may break to the downside here because we have broken out of the channel, or we may see the continuation higher because we actually held the outside return, the most recent structure level. So this could go out either way. What I'm going to do though is this area here, I'm just going to drop to the 15 and see if it provided something like a rotation pattern. Well, look at what we did. This was a test, this was a test. Now for this to be valid, for a valid double bottom, we need the second test to come down and test the closes of the candles. That would then provide you a valid retest. And we know that this occurred at the outside return, don't we, which was here. Yeah, so this was a valid retest. Now, could you have used it aggressively on the second test? No, because we did not have the RSI that went oversold in this area. Okay, for me, this is the Aussie dollar CAD, and I needed the RSI here to be below 20, and we didn't have that. So it was not a valid double bottom I could take. However, when the double bottom gets confirmed, and it gets confirmed by this V point just here, this is the V point, the tops just here. And once we have a confirmed break above, close above, like we did here, then that then becomes a valid double bottom with or without the RSI. Okay, so just to run over that again, the RSI is only needed if I'm going to get involved with a potential double bottom. The RSI is not needed when it's a confirmed double bottom, because we've already broken above the structure level. We now have confirmation it's a double bottom, so this would have been a valid entry, guys. And this actually would have been quite nice. I obviously wasn't in it. I was out the majority of yesterday, but just to run through this would have been your entry on the close of the candle. Stops would have been an ATR below the low, which was 5 pips. And yeah, that would have been your risk. Let me go out to the 60. And in my opinion, I would have moved to break even right now, because we've clearly had the break above, close above, but I would have moved to break even, and I would be holding for the continuation here. Did anybody spot this, or did anybody get involved with this? Again, trendline structure. This was the most recent outside return, which was a double bottom. We came into it, we produced a 15-minute double bottom, and we rallied up. Now the double bottom played out, it came into previous trendline structure, so again, I would be at break even now if I was involved with this. So we'll wait and see what happens. I would like to see the break above, close above, a pullback for my entry, but if not, and this thing loses, at least I get the experience of watching the trade play out and how I would have handled it if I was at my desk, and just to see whether or not it would have been a free trade or a winning trade. So I'm not going to do the higher time frame analysis here. We know that we're really just waiting for this breakout pattern. So I'm going to move that to the side. And again, guys, if we do break to the downside, we're going to be waiting for a 20. I was going to say we're going to be waiting for a 2618 based on this double bottom, but for the 2618 we need a break above, close above, and a pullback. So Aussie dollar CAD, just going to wait for the time being, guys. I'm going to move that to one side. What else do we have? Okay, the Aussie dollar. The Aussie dollar, we were waiting for a pullback for the entry on the AB equals CD pattern and the Gartley pattern. Now, unfortunately, we didn't get it, and what we did is we pulled back up to retest the highs. So what we're going to do is we're going to do a complete top-down analysis here and get an indication as to where we currently stand. As usual on the dailies, higher time frame analysis is we have this previous big level of support. We'd come into it, we said that this could be a double bottom. We had the RSI confirmation, and from that point we then did see the move higher. As a minimum, the outside return is actually this entire area just here. But as a minimum, you would look at taking targets as a minimum at this zone. Realistically, we could see a move higher here. And was this the one where we had trendline structure? Yes, it was. So we had 1, didn't quite hit there, 2, 3, we could see a move all the way up to this level. So there's a significant amount of pips still up for grabs here, 140 pips based on that big daily double bottom rotation pattern. And we could see a few things here now. Very simple. We could see a 2618 trade where we see a pullback. and then a continuation higher, or we just may see the market continue higher. Now we're going to drop down one time frame lower and take a look to see if there's any type of trend or any way to get involved with this move higher. You can see there is a trend on the 240, but we can see it clearer on the 60. So this is what I'm going to do. Here on the 60, the trend is like this. We had a move higher, then we saw a pullback, then we saw a move higher, then we saw a pullback. Where did we pull back to? Well, if this is the entire outside return, we'd pull back to the actual candle closes, which would be a second chance entry, and you could have quite simply looked for a higher high, higher close, and we did get one just here. No, we didn't. Nope. Okay, this was a higher high, higher close, but if you waited for a better entry, this was your next higher high, higher close, and then this was a higher high, higher close. So if you took the best one, which was this, you would have needed your stop 180R below the outside return, which was currently 9 pips. I'm just doing this just to show you guys, and if you were taking first targets at a retest of the highs, you would have had a very inverse reward to risk. Now if you were just holding this to come up to this level for targets, well, you would have had a positive reward to risk. However, there is a problem here, and that is that because we didn't get our optimum entry, and let me go to the 240 here, guys. Okay, our optimum entry was right down here, was actually in this level. And that meant that having our stop below this level provided us the highest probability of holding the trade to go up and hit this trend line structure without the market reversing and stopping us out. But because we've got involved pretty much halfway towards targets, if we're going to hold this trade for a retest of this level, it means that if the market reverses at all to this point, we're going to be stopped out. So it actually means that we have a lower probability of just seeing a complete rally go up, because how many times do we see a directional move? You know, we've got one here, and then it was sideways movement. Now we've got one here, and we could see this continue, but at the same time we could see this. And then we could go higher and back. We could do that. And because again our stop is not in the safest place, we have a lower probability of getting those targets before being stopped out. So if you do want to get involved with this trade, I would personally handle it by having my first target at a retest of the highs, and the problem here is that you would have an inverse reward to risk. So in this instance, this was not a trend continuation trade that I could personally take, and what we've actually done now, guys, is you can see that we've come up to retest the structure level that I thought we would. So right now there's no trend continuation trade for me. What I now need to see, because we've had the pullback, I now need to see a new high, and once again I need to see another pullback. This then will be the outside return, and I will quite simply again look for a first, second or third chance entry with a better reward to risk, say that much risk. Might have to be a little bit less than that actually, something like this. First targets maybe up here, giving us a positive reward to risk, and hold second targets for a retest of that higher trend line. But because we've retested the closes of the candles just up here, I don't have anything on the radar at the moment, and I'm just going to be waiting, just waiting for another extension and another pullback. Any questions on the Aussie dollar, guys? If not, we will move that one off to the side and move on to the next currency pair, which is, let's have a look. I don't really want to I don't want to go over currency pairs that don't have anything on. So just as a recap, just to show you this, the Euro Aussie, I'm still waiting for us to come and retest that trend line. And then I'm going to be looking for an entry long into that big back pattern and the trend line structure. So still waiting for that one. What else do we have? Euro New Zealand, I don't have anything on that, so we're going to leave that one. Euro dollar, we're all short that one on the double top. Okay, let's bring over the pound Aussie. So in the last webinar, we looked at, wow, look at that. Look at that, okay. We looked first of all at the back pattern just here, and we said that we could see a move higher up to this level, and we could look for a rotation pattern. And you can see price came all the way up to this level, and then it did actually reverse. Now, if you got involved with this trade and your stop was at the 113, or you quite simply used a 180R stop, well, look at this, you were just stopped out before price decided to reverse and go and hit your targets. So you were likely stopped out of that. Did anybody take that trade? What I'm interested in is this, is the flag pattern we spoke about. Still have the workings out here, as you can see. It wasn't a flag for me, but a clear swing in the market, 4 touches either side. We even got, just here guys, we even got the retest before the breakout. And I say it in the educational videos, and I say it in all the webinars, look out for the double bottom or the retest before we get the breakout. And boom, we got the breakout. I said that this could be one of those opportunities where you simply wait. Instead of playing for the 127 extension, you actually wait for price to come up to test the closes of these candles for the back pattern. And that was actually a beautiful move of about 70 pips. Did anybody get involved with this? Again, it wasn't for me because this area didn't come into a good enough structure level. You can see looking left, there was an internal level of structure, but the flag itself formed in the middle of consolidation, and that's not where, it's not usually where we see flag patterns. So this is quite rare, and that was the reason why I didn't take it. Did we have the Rsi Confirmation there, by the way? Well, this is a pound pair. The RSI needed to be below 30. We was at 26, and there was divergence. So this was a valid flag with a retest, guys. Beautiful, beautiful. Nice to see it played out. I, of course, was not involved with it. We'll do the high time frame analysis on the pound Aussie though. Dailies hasn't changed in the past month. We're just consolidating sideways. Stuart says Marcus is staying away from the pound pairs, but would he have taken it? That's the question. Would you have taken it, Marcus? Hindsight is a great thing, and you got to, you know, when you're doing back testing, you need to be very careful that you don't do hindsight trading. And hindsight trading is basically you're going through your back testing, you're looking at potential trades, and then you come across a valid opportunity where you decide to not log the trade. So the trade lost, and you find a reason to not log the trade, like it happened at 2 in the morning and you wouldn't have traded it. It happened when there was a news event out that day, you wouldn't have taken it. You are busy at 12 o'clock in the afternoon and you know you may not have been by your charts, you wouldn't have taken it. You find a reason why. And what you can end up doing there is sabotaging your backtesting results basically. And that opportunity there, when you're going through your backtesting, you come across a valid flag pattern. If you say to yourself that I can't take the trade because it didn't come into a good enough structure level, or it didn't occur within the type of movement that you typically see flag patterns, then you need to be consistent with your back testing. So you either need to log it and consistently log all those types of trades, or not log them. And the same goes with your target taking. 95% of the time my target is the 127 fib extension. In that example, I said to you, you could hold for your targets for that bigger move, and that's what happened. And if I was doing my back testing and I came to log that, would I have logged it under 127? Or would I have logged it under the extension? Or would I have maybe split it? And you just need to make sure that when you do your back testing, you're very consistent with this, because your back testing is going to be showing you what potential results you could get when you're live trading. And you need your back testing to be as close to your live trading results as possible. So great to see it played out. Wasn't for me, but very, very nice pattern. With that again, flags form channels. You get breakout, you get rotation patterns or retests before the breakout. Classic example, you would have risked 20 pips there for the extended target of 70. Very, very nice. Back to the pound Aussie though. Back to the pound Aussie. Consolidation. It's just, there's only going to be lower time frame trades for me here on the pound Aussie. So 240 is consolidation. We go to the 60. Nothing but consolidation. We go to the 15. Okay, on the 15. Nothing on the 15. Let's drop to the 5. Okay, on the 5. Nothing either, guys. Absolutely nothing on the pound Aussie. Okay. If you have anything on the pound Aussie, please let me know. I have absolutely nothing on it though, so I'm going to move that off to the side. And what will we take a look at? We'll take a look at the pound yen. Okay, yeah, pound yen. We spoke about this on the last webinar. And where did we say targets could be? Okay, so we said targets could be anywhere within this outside return. We are well on our way to that area. But when we spoke yesterday regarding this, we looked at the extension, the pullback, the extension, and we were at this level, and I said that we could look for the first chance entry within the wicks, the second chance entry within the body, and the last chance entry for a trend continuation trade. If you recall as well, we did say that we could see a rotation, we could see a head and shoulders, but primarily this was trend continuation for me. We got the pullback into the previous wicks, and from there we have continued higher. Now the question is did we see a rotation pattern on the 60-minute that would have allowed us to get involved with this trade? And if we drop down to the 60, this would have been where we needed that rotation pattern. If you remember, I drew it out like this, so we would have needed the double bottom, but I think we didn't have the RSI confirmation, did we? No, we didn't, and I said that we're not going to get a valid double bottom. But what we did anyway is we saw a shallow pullback and then a continuation higher. So we didn't get the entry, the pullback was too shallow, and it didn't provide a first chance entry. But what does this show us, guys? Okay, just take a step back a moment and look at this. We've got a very long extension, a shallow pullback, an extension, a very shallow pullback, and now we're going higher again. Okay, so shallow pullbacks are indicative of long extensions, so we could still see a decent move to the upside here. And again, as a minimum, we're looking at price coming into this outside return, potentially to this 13400 psychological number, so there's still around 80-ish pips up for grabs. Let's just go back to the 60. And the way the trend looks now, I'm just going to delete some of this stuff off because obviously our trade idea played out without us getting an entry. Okay, so what we're going to be looking for now is we had the extension, the pullback, we had the extension, the pullback, we've had the extension. So this is now our outside return. We're going to be waiting for a pullback and a chance to get long. So this could play out today. I would like to see a bigger extension first. That would be nice. Something a little bit further than this. Because what it will do is it will actually then provide us a better reward to risk. So that may be our risk. That'll be our reward to target ones, and you can hold second targets up to wherever you think we could potentially go. So let's go and take a look at the 15. This was looking very nice yesterday. It's just a shame that we just rallied straight up basically. Here on the 15, nothing. Take a quick look at the 5 as well. And on the 5, nothing here either. You have a little double top here. Broke to the downside and then broke back up. Nothing that I'm interested in at all. Nothing. So it's a case of just waiting for the 240 or the 60, seeing if it does provide another opportunity to get involved in the trend continuation trade. So I'm going to leave that to one side. Pound dollar, guys, we'll go back over the pound dollar. We were waiting for this potential back pattern. Back pattern is still valid. Bit ugly, but if we do come lower, that back pattern is still valid. We'll do the high time frame analysis here, and you can see we've now violated this level of structure and gone higher. However, we've come straight into the outside return, which is here, so we've already hit our target, which is here, and so we're now sandwiched between these two structure levels. So we've got no confirmation we can go higher and no confirmation we can go lower because we've just violated this level of structure. So our hands are tied at the moment with this. This means that there would only be lower time frame opportunities for me. Stuart says this is why we sit on our hands. Yeah, it's a shame. The pound yen was looking very tasty. The move just happened without us. It happens. You can go and do analysis on all your different currency pairs, and you'll find that 80 to 90% of the time your analysis is useless because the trade either goes on to hit your projected targets or it loses, and it didn't provide you that entry. So 10 o'clock, we just had the 4-hourly candles close, just seeing how the New Zealand dollar closed. Okay, we've put in a nice red candle, and we've put in a lovely lower low, lower close on the euro dollar as well for our double top there, playing for a retest of the lower structure level. Okay, as I say, both those trades have just gone into profit. We'll see if they hit. Back to the pound dollar. So nothing really on here on the dailies, and we'll take a look at the 240. We did talk briefly about this trend continuation trade and how I wouldn't be interested because we only just violated the outside return. We didn't see a big extension, and we've come into previous structure, so that's why I would not be interested in any trend continuation trade. Down to the 60. Okay, on the 60 we have, yep, this back pattern looks a lot better on the 60. X to A to B, B to C, CD completion down here. Do we have anything else? We may have a back pattern on the 15 using this X leg. Maybe a Gartley, yeah, a Gartley here. X to A to B, B to C, CD completion. Very, very shallow around the 786 would be the completion of that pattern. Down to the 5. Nothing on the 5 minutes for the last couple of hours, just sideways movement, just junk really, nothing that I'm interested in. So really the only thing I'm interested in there would be the back pattern. So I'm going to draw this out so that we've got it for the next webinar, see what happens with it. Any questions on the pound dollar? Stuart says looks like an ugly inverted head and shoulders. This on the pound dollar. This one. I think we had some trend line structure here. Just let me redraw this out. Was it from here? Yeah. Okay, if this is what you're looking at, then yes, this could be a ugly head and shoulders, and the reason, just let me go back here. So head and shoulders for me is a rotation pattern. Rotation patterns need to occur at structure and hold structure. So here on the dailies, this was our structure low just here, and did we come down and test it and hold it? Here you can see on the daily we did. As we go to the 240, this was the very low of our structure level, and we did actually hold structure. So for me, this is, yes, a valid but very ugly head and shoulders with a very, very shallow pullback. Now, in this instance here, what we've done is we've held the neckline 4, 5, 6, 7 times. Okay, so until we violate this level, you can then look for a pullback and then look for a long opportunity. The problem is this was your outside return here. How high is price actually going to go? The other thing is, if you actually see a rejection off this level, where do you look for an entry? Do you look here, here, all the way down here for a chance to get long? And so this type of head and shoulders, or even this type of potential rotation in trend, just isn't for me personally going to offer an opportunity. In fact, probably the best thing for me would be a break above, close above, and then a pullback trade, and then just hold the trade and manage it and see how high we can actually go. But there's absolutely nothing here that I would personally be interested in trading. Remember, structure goes both ways. We have it this way and that way, or that way. Yeah, we have structure, horizontal and trend line structure. Let's take a look at the New Zealand yen. We haven't taken a look at this for quite some time. Wasn't a great deal on it for me, that was why. Okay, on the dailies. So we're seeing price coming lower. We saw a pullback, we saw price come lower, and then we're now seeing a move higher. We're actually up into this level of structure right here. That just so happens to come in at the 6900 psychological number. Do we have an Rsi confirmation? Well, 76 is what we're overbought at. That isn't enough for me to look at a short on the dailies, but let's go down to the 240. And on the 240, what we've done here is, this was the structure level we were paying attention to. We actually now have a confirmed break above, close above. The question is, how high can price actually go? Because if you're looking at the trend, we have a move higher, a pullback, and a move higher, and you can now look for a pullback and a chance to get long if there is room for price to go higher here. So let me go back to the dailies. Okay, so as a minimum, we would be looking at price coming into this zone, or this zone just here. Now, if we were to move this structure level up, what that would do is it would mean that we would pull back to the closes of the candles just here, and we would only be within the wicks here. And you know that for me, target taking, I actually need price to come and test the closes of the candles, so there is room to go higher here. And did we have an AB equals CD pattern here? Let's work this out. Oh, look at that, we did. Okay, so here on the dailies, there is a small swing in the market here. You had a move lower, and if we duplicate this and move it down, it actually provided an AB equals CD pattern. And with these patterns, we see targets being hit at the 382 fib. And as you can see, we are well on our way to hitting that 382 fib. Now this 382 fib just falls short of retesting previous structure. So it's highly likely here we're going to see a move that will come up to test the 382 and the closes of the candles. Now we've obviously missed our optimum entry, which would have been down here, but again, just because we've missed our optimum entry doesn't mean we can't get involved in the trade, because we have an AB equals CD pattern. We've seen a move higher, we're coming close to targets and previous structure. If we drop down the time frames, this was the structure level just here that we needed to violate to see a potential rotation in trend, and that's what we've done. So we've seen a move higher, the pullback, the move higher, and the pullback. So we can drop one time frame lower to the 60, and we can see this trend a little better here, can't we? We redraw this out on the 60. So we've then had a move higher just here, and this would now be the outside return. And once again, we're going to be looking for the first, second, and third chance entry. If nobody knows what that is, go onto the website. It explains in video format and gives multiple examples of how to get involved with a trend continuation trade using those first, second, and third chance entries. Chi says bang on the 70 as well. Yep, I did notice that, Chi. For me personally, I would hold the trade for it to come up to test the outside return just here. But yes, if you wanted to, you could then take targets at that flat 70 psychological number. Good eye, good eye. So really this would be now a second chance entry, because we've already violated below the wicks just here. And second chance entry, if we saw a relatively deep pullback, you would have a risk of this much. First targets would be up here for a retest of the closes of the candles, and your second targets would be either the 382, and as Chi says, that's 70 flat, or a little bit higher for that previous level of structure. Either way, you have a nice trend continuation opportunity here. Let me make a note of this. So New Zealand yen trend continuation. Let's drop down to the 15, see if there is any other confluence here that would allow us to gain an entry into this move. What other things can we look for, guys? Okay, so I'm on the 15-minute now. Within this big highlighted blue area, what other things can we look for to give us extra confirmation we could see a reversal, to provide us maybe an entry reason? Chuck it in the chat for me what we could use as potential confluence here. There are three things off the top of my head that I would look for in this price reversal zone. Anybody know what they would be? Just reading Sky News, guys. It's just come through. Boris Johnson's decision to phone just went off. To suspend Parliament is unlawful. That's the Scottish court rules. Will the Scottish courts have the power to overturn Parliament? I don't know. Well, there you go. It's deemed unlawful. Does that mean he'll have to reopen Parliament before the 14th? So I'll give you some clues. Within this price reversal zone, we could look for number 1, X to A to B, B to C, CD completion. We could look for an advanced pattern. So we could look for a bat, cipher, Gartley pattern. That's the first thing that we could do. That would provide us additional confirmation and a better reward to risk. Okay, the next thing we could look for is a move lower, a pullback, and another move lower. An AB equals CD pattern is something else we could look for within this zone. That's number 2. And the third thing that we can look for is we can look for confluence at, say, a psychological number, which is right here, the 6900 flat. So I'm just going to put a structure level in here. I'm actually going to make this a different color. You know, psychological numbers is where we typically see double tops, double bottoms, because that's where we tend to see structure being adhered to. Where's my red gone? And so it's an area that we want to pay attention to. So I'm going to make that red and zoom out. And does it come into any form of structure? Well, we do have a test here, 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 and just here as well. So if we saw a double bottom down here at a psychological number, you can either enter aggressively or wait for it to be confirmed and a pullback. So dropping down the time frames, looking for extra confluence, looking for advanced patterns, looking for ABCD patterns, looking for psychological numbers, looking for double tops, double bottoms, even head and shoulders here on the lower time frame, looking for confirmed double bottoms and 2618 trades. Also looking for fib confluence. Let's throw a fib on. From our swing low to our swing high, we have a 61.8 fib, just a few pips below this psychological number. What else do we have? Doesn't look as though we're going to have anything else. Yeah, this is the only fib I can draw on here. Yeah, so potential there to monitor the lower time frame, and if it did provide something like this, a very small double bottom, well, it means that you've got a very small amount of risk, something like that, for what would be initially quite a large reward for a retest of the highs. So plenty to watch out on the New Zealand yen. Any questions on that currency pair? Let's move on. I'm just going to take a look at Sky News, guys. I'd like to know what they're going to do about it, about Boris Johnson. That's all it says. It doesn't look like there's any update. Okay, that's something to monitor, guys, because if they find it unlawful in the open parliament, then they may come back and vote very quickly, and we could see some movement in the pound. So do pay attention to that. If you've got the Sky News app, make sure you get the notifications because it'll come through in real time. Okay, dollar yen. Dollar yen was another trend continuation opportunity where we had the long, the pullback, we'd made a new high, and you can see that just here. We saw a pullback. Where did we pull back to? Previous structure, and then we just went higher. So again, we didn't see a pullback for a second chance entry, but we got the move higher. So another trade that has played out but didn't provide that entry. I'm not going to do the higher time frame analysis on the dollar yen, guys, because we didn't have any projection as how high this price could go, and it's just not worth going over. So instead, what I'm going to do is going to take a look at a few different currency pairs, that I typically don't trade. Before I do that though, I'll just have a quick scout around at, okay, the dollar CAD. We did go over the dollar CAD last time, and we were looking for another trend continuation trade. So I'm just going to zoom out so you can, I'll go to the dailies actually. Dollar CAD, if you remember, we had this trend line structure. We had price that came up to this area, and eventually we saw a big move to the downside. We did say that we could see price now come down to retest this lower level of structure, and so we were looking for that trend continuation trade. And what we had was this. We had a move lower, a pullback, a move lower, and this was then the outside return, and we said that we could look for a short opportunity in here, and there was this potential back pattern just here that would have provided us a nice shorting opportunity. Now if I drop down to the 60, it looks as though this back pattern is now invalid. Yes, it is. So it didn't provide us that opportunity to get involved. So back on the 240, what we did is we had the move lower. Then we saw a pullback. Where did we see that pullback to? We came back into the wicks just here. Sorry guys, 1 second. Oh, my toe. This is the toe where 2 weeks ago I was running on the sand and I kicked a massive stone. And every now and again I get shooting pain through my toe, up my leg. I pulled all the tendons in it. Oh, it's a bloody nightmare. And it's my two small toes, so it's like the tendons are going tighter and curling my toe the other way. It's a horrible sensation. It's not that painful, but it's bloody awful. I've not slept with it since I've done it. Having the bed sheets just resting on the top of my feet is just awful. Anyway, I'm sure you don't want to hear about my feet problems. So what we did is we came back into the first chance area. And if we drop one time frame lower, did it provide us a double top as an entry, or even a head and shoulders? And the answer is no, it didn't, guys. And from that zone, this is very, very similar to the pound yen. Once again, first chance entry, we saw the move lower. It didn't provide us any type of entry. So nice to see that the move happened, but would have been nicer to have seen some sort of entry here. And what we've done now is, this was our lows, we've come down to retest, and we have failed to make a new low. So I'm actually now going to be waiting for a new low, then another pullback, and a new low, and I'm going to be looking for this every single time until we come down and hit our projected target. So just because the trade played out here as we thought it would but didn't provide an entry doesn't mean that we can't still get involved in a trend continuation trade. We're just going to have to wait for the market to provide us a valid entry. Harry, sorry man, hope it gets better soon. Yeah, it's one of those things. Cannot be helped. Really limiting my exercise that I can do though. I've got a gym downstairs which I use, running machine, cross trainer, bike. The only thing I can really use is the bike, and I've got to wear firm shoes underneath. My running trainers aren't really good enough, but if I wear a firm shoe so it doesn't bend my toe or the underneath of my foot, that really helps to support it. So that's kind of the only exercise I can use at the minute that is going to help me lose a little bit of weight. Anyway, back to the charts. So I'm going to be looking for that on the 60. Let's drop to the 15, see if there's any opportunities at the moment. Okay, just delete a couple of these off. You did have here, looks like a back pattern. So X to A to B, we hit the 50%. B to C, CD completion at the 886. Stops would have been at a minimum of the 113, and if you were involved with this, well, it did rally up just here and tap that 382. What time did this happen at? Okay, 5 5 o'clock yesterday. So a nice winning back pattern there. Wasn't worth a great deal, around about 10 pips in the end of profit, but it is nice to see the pattern go on to win. And we do have another pattern setting up from the look of it. No. So what we've got here is we have a swing in the market, a directional move. Now we do not hit a 50% for the fib, but if it's valid for you, you do have right here 1, 2, 3, 4 tests for a flag pattern, previous structure. We haven't quite come into it as yet, but remember that typically we come into the wicks, and that's where we tend to see the reversal. You could look for a retest before the breakout. Remember guys, we've just been over this on the pound Aussie, okay? Now this flag isn't going to be valid for me either, but look for the retest within the channel before the breakout. So you're going to be looking for the market to come up to this zone, physically hold that structure level. Do you have the RSI confirmation? Yes, you've got the RSI overbought with divergence. The problem for me is, well, actually this may be valid guys. Okay, the problem for me is on the higher time frame here, we've got no confirmation. So let me just confirm this. Here on the 60, we've held this level of structure, okay? We do not have a confirmed break below, close below. Here on the 60, we already have a doji, indication there's some selling pressure at this zone. Down to the 15. We do actually, if I put a structure level in at this level here, we do, sorry guys, we do not, okay? Right here, we do not have a confirmed break below, close below, so we have a valid flag pattern. It's got 4 touches, it hits a minimum of a 382. It hasn't quite come into the outside return, but it could be offering us a double top here, a retest with the RSI confirmation. Now we know that higher time frame, we're going to be looking for a short opportunity, and this could be an aggressive way to get involved. It's aggressive because we do not have the confirmed violation or break below, close below here, but it's far safer if we get a double top up here, because this will offer you something like this much risk for a reward of around this much. And first targets as a minimum would be the 127, just down in this level, and this could provide you something like just 9 pips of risk. I'd actually have you stop a couple of pips further back because this is the lower time frame. So you could be looking at something like 13 pips of risk for a reward there of around 36, something like almost a 3 to 1, probably 2.5 to 1 once you include front running and fees, things like that. But again, isn't going to be one for me. However, if you want to wait for more confirmation, good morning Cody, morning Jack, if you want to wait for more confirmation, wait for the retest, wait for the confirmed break below, close below, get involved with the trade then, or wait for a pullback for a 26.18, or there are many options you can do with these flags. Wait for a breakout, wait for a pullback to this structure level and a short, or wait for a pullback to a previous internal level of structure like this and look for another short. Many opportunities. This is the type of flag then where you maybe just want to sit and wait and monitor it. Your most conservative entry for me would be this double top. It's a shame we didn't have the break below, close below here, but higher time frame we're looking short, and that could be your opportunity to get involved for first targets at the 127 and hold secondary targets for a retest all the way down at this level. Just in time Cody for the dollar CAD. Potential flag pattern there. Okay, move that one off to the side. What I'm going to do then is, there's no point me going through some of the other currency pairs that I have. There's absolutely nothing on them. Instead, I'm going to bring over TradingView, and we will take a look at some of the other currency pairs beyond my portfolio and see if there's any opportunities. This only takes around 5 minutes or so to scan through them, but if we do have any opportunities, we'll bring over the normal charts and take a look at them. Just going to make a note of the dollar CAD, by the way, guys, just to monitor that. Okay. Aussie dollar Swiss, we're currently on the 4 hour here. You can see we've had a triple bottom. We've seen a move higher into previous structure. Just drop down to the hourly and we'll take a look at it. Yeah, nothing there for me. Let's go and take a look at the Aussie dollar yen. If there are any currency pairs that you guys want me to take a look at, let me know. Once I've done this review on TradingView, we'll call that a day. Aussie dollar yen, very similar to the Aussie dollar Swiss, triple bottom. We've seen a move higher. That move has come up into this zone just here, previous structure. It could be a double top up there. Let's go and drop one time frame lower to the 60. No, not for me. Nothing there. Actually, let's bring over a chart for the Aussie dollar yen. Aussie dollar yen. Let's bring over a chart. It may provide a rotation pattern. Me too, Cody. Yeah, slow markets from the look of it. If I'm honest, it doesn't look to be a great deal of movement. So, do we have trendline structure here? Nope. Okay. So we've got, or could have at least, trendline structure here. I'm going to put a structure level on at the very lows just here. You can see double bottom, rotation pattern, and we violated to the upside. Okay, so we've seen a move higher. Where would we expect price to go to? Well, this is the most recent structure level, and if we wanted to, we could highlight just the wicks just here, and we could look for a rotation pattern in these wicks and also in this trendline structure zone just here. In fact, I haven't quite got this drawn correctly, and the wicks would be there. Okay, so the reason why I'm bringing this chart up is because if we look if we look to the right, we do have a psychological number. It's 7,400 flat. The RSI is not overbought, but we are at 78. So we've got two levels of structure here. We've got trendline structure. We've got the previous structure level which we're in at, and we're at a psychological number. So there could be the potential that we could see a rotation here. Let's drop down to the 240. Here on the 240, looking at the RSI first of all, and we've actually, wow, look at that. We've actually been, we were overbought. Look at that, overbought here at 95 with divergence. And if we look up, right here where we were overbought, this is actually a very good example of why we can't just use the RSI on its own. So here on the 4 hourly time frame, the RSI was overbought at 95, and we did not see any type of pullback at all. In fact, since then we have just seen the market going higher. So very rare do you see the RSI overbought at 95, particularly on the 4 hour time frame, and there was just no reaction. And the RSI is a tool. We simply use it to add confluence to other things like structure, breakout patterns, advanced patterns, psychological number, double tops, double bottoms, bat ciphers, Gartleys. We use all these different techniques and add them together. By themselves, these strategies or these indicators are not very powerful, but together, fibs as well, once we add them together, it can provide us good trading opportunities. So yeah, very good example there of the RSI and how just on its own it's absolutely useless. Cody says, as long as New Zealand dollar and euro dollar keep falling off the cliff, I'll be happy. Yeah, me too, Cody, me too. I've got my holiday booked for Christmas, 2 weeks at the Caribbean, and the wife always spends a fortune, so I need to earn the money back I've lost and some, just to keep the wife happy. So let's get rid of the RSI for a minute, and if we zoom out, this is what I want to pay attention to as well. The trend line structure is on the close of the candles. We can move it down so it's on the close of the candles here. But what we've just done here is we've actually violated the trend line. So the only structure level now that we can really pay attention to would be this previous level of structure right here. And if we reduce this down to just the wicks, then what we're left with really is we're just up at previous structure at a psychological number, which really just doesn't interest me. If it was 2 levels of structure, maybe, but I've got no reason to believe we're going to go higher or lower. It was just the fact that we were at 2 levels of structure with a psychological number, but this for me just isn't really producing anything. If we did do this and put in a very nice double top up here, well, you could look for having stops up here, and you could look for a move lower down to previous structure. Where is previous structure? It is down at this level just here. So I would look for targets based on the closes of the candles here. And I think, yeah, 145 pips if you can get something like a double top up in that area. And again, you do have the RSI confirmation there. I'll make a note of that actually. Aussie dollar yen 240, wait for double top. Cody, I had a rough one yesterday, 4 months old, did not sleep all day, and my 2-year-old was so naughty. What a day. Oh yeah, my son's off today. He's this week he started a new school. They've gone into private Spanish schools, both my daughter and my son, but he's not too well this morning. So he's currently watching cartoons, but also I've not been sleeping because of my bloody toe. Hate to keep harping on about it, but I do need my beauty sleep, and at the moment I'm not getting it. Let's bring back over. Where the heck has it gone? There we go. Trading view. Okay, let's carry on. Aussie dollar, New Zealand. I know there's nothing on that. Let's take a look at the CAD yen. Let's zoom in. I kicked a stone, Cody. This was about 2 weeks ago now. I was running on the beach. Running on the beach, trying to do my Baywatch impression of Dwayne Johnson, you know, with the muscles and the six-pack, and I kicked a giant stone. Yeah, played football with a giant rock, and I didn't break them. The toe's gone black, but I pulled the tendons in the 2 small toes, and it's just pulsating, and it just keeps me awake, and it's a pain. I can only walk with my trainer on. Nightmare. Nah, no good. I know. 240 on the CAD yen. We've had this area here of consolidation, which we've clearly broken out of to the upside. I would expect price to come higher to this higher level of structure, but right now there's nothing here that I would be interested in. Let's move on to the Swissy yen. Okay, let's take a look at the Swiss yen. Swiss yen. Okay. Let's draw out the trend. So we had a move lower, then a pullback, then a move lower. This is the very low of our structure level just here. Now the problem is that while typically we do come down to retest the very lows of the wick, technically we could see a reversal at any time. Okay, so we could still see the move lower to this point, but we could see the reversal at any time because we're within the wick. If we drop down to the 240, what I was looking at was this potential retest up here. I was wondering what this was. There is RSI confirmation, so we've gone overbought with divergence, and look on the second test, we are still overbought. That's a very good sign. Has this double top or this potential retest come in at any type of structure level? So I'm going to put a structure level in at the close of the candles and at the tops of the wicks, and we're going to look left for structure. Wow, okay, this is a bit of a mess. So we have that small internal level, internal level, internal level. No, okay, so nothing really here. This is not forming at a level of structure that I would say would be a valid double top for me. Exactly, Stuart. Yeah, it looks messy. So the structure level here, we don't have a clearly defined structure level. You know, in an ideal world, this is what we want to see. Boom. Something like this, an area of structure which is clearly being tested. Okay, we don't have junk either side of it. What we don't want to see is this, where it's messy, we have structure being violated here, 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 here. So it's not an area which I would pay attention to. So it looked quite nice when I looked at it initially, but a closer inspection, no good for me. So we move on, scanning the other currency pairs. Euro CAD, okay, Euro CAD, let's bring that up. Euro CAD on the dailies first of all. Stuart says, if it was at the V point, would it be better? It just wouldn't be valid for me. The structure level itself just was not an area where I would actively look for double tops and double bottoms. So even though it had the RSI and it looked like a double top, it just didn't come into a structure level that I'd be interested in. Okay, this is not going to be a trade that I'm interested in either. You can see we have two major levels of structure just here and here, and as we look we can see that we have almost come down into that structure level, but we are currently at a psychological number 14500. If I just drop down to the 240, I was looking to see whether or not this move lower could produce something like a breakout pattern. Now it could, and we could see the move lower to retest previous structure down at that 127, but I can't take breakout patterns at psychological numbers, which is 14500. So that would be a no-go either. Marcus says it reached structure. Yep, it has. Stuart, you have a few points it's been tested, not to worry, as it didn't. Okay. Let's crack on scanning these other currency pairs. Euro Swissy. No, let's take a look at the Euro Pound. Haven't looked at the Euro Pound in ages. Let's take a look at this on the daily. Okay. No, nothing on the euro pound. Pound CAD. Tis a pound pair. Nope. Pound yen. No. Pound New Zealand. Another pound pair. Just consolidation. New Zealand CAD. Let's go and look at the 4 hour. Again, guys, what I tend to do on these other currency pairs is I'm looking for good trend continuation opportunities or decent breakout patterns. They're pretty much the only two things I trade on the other currency pairs that are outside of my portfolio. Nothing. New Zealand Swissy. Nothing. Dollar Swissy. Nothing, and the dollar yen. Okay, nothing there on the other currency pairs for me. Does anybody else have any other trade setups, any other currency pairs they'd like to take a look at? Dollar CAD, guys, never got the double top retest, but if this was valid for you, you could use my entry technique, which is where we come up to retest structure. As long as we hold it and we see a red candle, you can use that as the entry. In actual fact, the red candle was also a lower low lower close if you was getting involved with that flag pattern. So it won't be one for me, but I will monitor it, see if we get the breakout on the pullback. And not too much happening out there then, guys. So just to recap, still monitoring the Aussie dollar CAD for this triangle. It's still valid for me because we came down to the middle, put in a rotation pattern. So if we get a break above, close above and a pullback, I will be entering that trade. Aussie dollar, you can look for that trend continuation trade higher. Let me just drop down to the 15, see what's happened in the last half an hour or so. And again, look for multiple entry techniques, Gartley patterns, AB equals CD patterns, double tops, head and shoulders, whatever your entry reason may be for that trend continuation trade. Euro Aussie, the back pattern, the daily back pattern with a beautiful trend line structure. Still waiting for that. That could come down to that trend line today. What else are we looking at? We're short the euro dollar. There's nothing on the pound Aussie. That was a complete waste of time. Pound yen, still looking for a trend continuation opportunity because there is room for that to still go higher. Nope, nothing on the pound dollar. Okay, New Zealand yen, trend continuation opportunity again. Look for rotation patterns, ABCD patterns, breakout patterns, head and shoulders, whatever it may be, to get involved with a trend continuation trade. New Zealand dollar, we're still short, and dollar yen, still looking for again trend continuation because we are in trend on that time frame. Okay, guys, any other questions before we wrap it up then? Well, thank you for joining me again. We will see if Cody is right and there's very little movement today. At the moment, there isn't too much. But apart from that, guys, thank you very much, and I will see you on the next webinar.